If you've ever bought a stock and watched it go up, only to sell it too early and miss out on big gains, or worse, held on too long, watch those gains evaporate, and then keep holding it, hoping it would come back, you're not alone. In fact, most investors struggle with knowing exactly when to sell. And it's not because they're not smart, it's because they don't have a clear, rules-based system to guide their selling decisions. I'm Brian D'Amico, investing coach here at VectorVest, and today I want to show you how most people are risking everything simply because they're guessing on when to sell their stocks, and how you can avoid those costly mistakes with a simple plan. Let's get to it. See, buying is easy. It feels exciting. You're full of hope. But selling, that's when the emotions take over. Most investors will sell too early because they fear giving back gains. Or they'll sell too late, hoping a loser will recover. Or worse, freeze and do nothing, and they'll watch losses pile up. But here's the real issue underneath it all. They don't have their exit planned before they enter the trade. You need to know your exits right from the very beginning. Think about it this way. Just like when you get on a plane, before the plane even moves, the flight attendants will walk you through where the exits are. They'll show you how to exit the plane if everything goes smoothly. You know, the normal landing. And they'll show you how to exit the plane if something unexpected happens. They'll point out the emergency exits. You need to treat your trades the same way. Have an exit plan for when the trade goes well, and have a clear plan for in case the trade goes against you. The problem is, most investors board the plane or enter the trade without ever checking where the exits are. Then, when turbulence hits your trade, and it always does, they don't know what to do. Some panic and bail out of a trade too early. Some sit frozen, hoping the plane or the trade will right itself. And some don't act at all until it's too late. But professional pilots and professional investors always know exactly where both exits are before they ever take off. And that's exactly what we need to build into every trade. Know your exit before you enter the trade. Without a predetermined plan, emotions take over, and emotions are terrible trading advisors. Here at VectorVest, we teach a simple three-part system to take the emotion out of selling. Step number one is to set your line in the sand before you even buy the stock. This is that point where you say, enough is enough. If it crosses this line, I am out of this trade. Step number two is to adjust your stops as your stock moves higher to protect your profits. We call this locking in gains as you go. Step number three is to weed out the underperformers from your portfolio. This will keep your capital working in the best opportunities. Today, we're going to focus on the very first one, which is setting your line in the sand. Now that you know why most investors struggle with selling, let's talk about how to fix it, starting with setting your initial stop. We call this your line in the sand, or LITS. Here's the simple goal. You want to give your stock enough room to breathe so that the normal price movements don't knock you out of a good trade too soon. Think of it like lanes on a highway when you're driving down the road. On a tight, narrow lane, even if you're just driving just fine, you might still cross the lines accidentally. Not because you're driving badly, it's just because the lanes of that road are simply too tight. But with wider lanes, you can relax. There's enough space for the natural ebbs and flows of your driving. And if you do cross over and you hit those little rumble strips on the side, you know something is definitely wrong and it is time to take action. Your trades work the same way. If your stop is too tight, you'll often get knocked out of good trades too early, take small, unnecessary losses, and watch the stock climb after you've already sold it. But if your stop is too wide, you may give back too much and hold on to losers longer than you should. So where do you set the right width for your lanes? This is where most investors get tripped up because they just pick an arbitrary number like a 10% trailing stop. But the problem is that doesn't consider how safe or risky the stock actually is. Here at VectorVest, we take a smarter approach. Our stop price is calculated for every stock that we track using two key components. The first component is we look at the stock's 13-week moving average, which gives us a picture of its natural price movement. Then we adjust that based on the company's fundamentals, its financial strength, its safety, its consistency. In short, if you got a company with poor fundamentals, it means it's a riskier company, and thus you need a tighter stop. If you've got a company with good fundamentals, that means it's a safer company, and it deserves a wider stop. This gives each stock the proper amount of breathing room automatically. No guessing, no emotion, and no arbitrary percentages. Well, what's the result? You stay in strong, healthy stocks longer, letting your winners run. You exit weak, risky stocks sooner, keeping your losses small. And you can spot this instantly on your VectorVest chart. As you can see, the price stays above the stop during healthy uptrends. And if the price crosses below the stop, that's your clear, emotion-free exit signal. Notice how the stop price moves gradually, staying well below the price as the stock moves up. But when the price drops and crosses below the stop, that's your clear signal to sell. No second guessing. Now, before we wrap up, let me give you a quick heads up on what we're going to cover in another video. Because even with the best stop in place, there's one more piece that protects your portfolio, and that's position sizing. You want to make sure that no single trade puts your entire account at risk, even if it hits your stop. That's what we'll cover in the next video. You won't want to miss it. If this approach makes sense to you and you're tired of guessing when to sell, I want to invite you to take the next step. First, you can get a free stock analysis on any stock that you own or any stock that you're interested in. Just go to vectorvest.com/FSA for free stock analysis. Or if you're ready to see how our entire system works, including how we help you find what to buy, when to buy, and exactly when to sell, you can test drive the VectorVest software for 30 days. It's simple, affordable, and you'll have full access to the tools and coaching to finally invest with confidence. I'll see you in the next video.